Hello traders, today we're going to do our weekly analysis. As always, I want to go over daily charts on the NASDAQ, the S&P, the Russell, and then weekly charts on natural gas, financials, and then a monthly chart on crude oil. And then I want to talk a little bit about volatility, and then go over the trade of the week. And if you guys have any questions, email them to me, therealalphaaction@gmail.com. In the subject line, just put YouTube question in all caps, and we'll get back to you if you guys have any questions, or try and leave them inside the comments section. But that's what we're going over for this week. So first thing I want to take a look at is the NDX. So when taking a look at the NDX, the first thing that I notice is that I drew this channel. The channel doesn't 100% need to be perfect. It gives you a range though on the top, it gives you a range though on the bottom. And when I drew the channel, I did notice we were at the top of the channel, and on top of that we were getting overbought. In pre-market, tech is already starting to pull back. So I think that a small pullback could be seen to the bottom of this channel. So if tech sees a small pullback, what does that mean for the broader market? That means that for us not to go a lot lower in the market, we need a situation where the financials and other sectors of the market are able to pull forward when tech is being weakened. Because tech cannot take all the burden. Because tech does need to come back down after the fact that it's overbought. So, with that said, tech is getting overbought. I think it's going to the lower part of this channel. Maybe this week ends up being a down week, or it could just be that this week we're just going to get a small pullback for 2 days and then we bounce after 2 days. We don't know for sure, but it's definitely in an uptrend. I don't want to fight it yet. And then I want to take a look at the S&Ps because the S&Ps are more fairly weighted. The NASDAQ is almost all just tech. S&Ps are weighted a lot more with laggard sectors like your airliners or your cruise liners or financials. Things like that are laggard sectors. So taking a look right here, I'll erase these drawings right here. The first thing I see is that we had some resistance right here because there's a bunch of axis. Axis is just a shadow on a candlestick right here, and then once again right here. It did not want to get up there, but eventually though we did break up, and we had this large gap right here on the chart. And I'll clear this chart so you can see a lot more clearly. We had a gap right here. Gap fill, it got to the top of the gap, and I think it's going to retest support and then go higher. And that's how breakouts generally tend to work, is that you have right here, you had it was previous resistance, it is now support. It breaks above it, it doesn't just keep on going higher, it breaks above it, makes a high, then it has to have a higher low, and then go to higher highs. And the gap provided the perfect time to do that. Next one we're going to take a look at is the Russell. So taking a look at the Russell right here, what we're able to see is that we did find some resistance right here, and I'm going to add another resistance area right there. So we do have quite a bit more resistance on the Russell, and the Russell is made up of a lot more of those laggard sectors like industrials or financials. And laggard right here, or we found some axis right here on the laggard sectors, and the Russell is a really good proxy for where the laggard sectors are. So right there, we found a lot more axis. The Russell just does not seem to be catching up with the rest of the market in the same exact way. The clear thing though is that the Russell is still in an uptrend regardless, even though the Russell cannot get the same amount of momentum that the rest of the market has. It's still in an uptrend, and we have to respect that. And there is a possible rising wedge though, and we'll see where that plays out. But I think right now the Russell will continue to go higher, but it will go higher with laggard momentum. So something to keep an eye on right there. But I think Russell continues to go higher, but it goes higher with less momentum than the rest of the market because of that sector weighting. But still is holding up that trend line. Trend line's working perfectly. It just doesn't seem to have follow through right now, so it's trading sideways. But at least it's not going down. And so I cannot confirm that this would go down. Still bullish on the Russell. Okay, weekly charts. natural gas. So this is an interesting one right here because it's been down for a very long time. So we can actually zoom out and we can see for a very long time it's been coming down here. And when looking at this right here, we have a lot of news that's being piled in over here where first off we see that Buffett came in and Buffett bought a bunch of Dominion Energy's natural gas resources. People are coming into natural gas and trying to bottom fish it. And we can see on the RSI, actually, we see sort of momentum where it just goes chop straight up. And so people are also talking about the inverse head and shoulders. I'll go over that. But we're seeing all these different things that that are saying, could natural gas possibly have a trend change? So left shoulder, head, right shoulder, bullish break. And so we did have that inverse head and shoulders. Now, if we see follow through on this chart and it stays up for the next week, it will be very significant. Because on the weekly chart, what we've noticed, and you can actually take smaller moving averages right here. I'm using simple moving averages, 20, 50, 200. You can actually take longer term moving averages or shorter term moving averages that are exponential. So 8, 12, 16. And it's going to, essentially it's going to sandwich beneath the price or sandwich above the price. And it's really going to follow the price really well. That's the point of an exponential moving average. That doesn't lag too much, follows the price really well, and sandwiches right below or right above the price. And what we've seen on the weekly charts is that it tends to sandwich right above the price. But now it's sandwiching below the price and it's acting as a layer of support. And that this might just be the top, or the bottom for natural gas, and then natural gas likely headed up here, possibly even all the way up here once again. And so we would have to watch out for that, but definitely something to look at right there. I do believe, though, I will get bullish on natural gas and have a long bias if natural gas is able to hold its current price or better by the end of this week. But I do think longer term, I am bullish on natural gas. And I'm just looking for that trend change right there where it gets above those moving averages and it gets above previous resistance now going into support. But all the bullishness is there for natural gas. Dollar weakness will push up natural gas. And also, it is just at a multi-year, possible decade-plus low. We can actually go out to the monthly and check this. And so, yep, my thoughts were confirmed. This chart's going back to 2003, and so we are at basically multi-decade lows. And so at some point, natural gas has got to bounce, and it cannot just continue lower like this. And I think if it can hold the current price or go higher over the next 3 days and 10 hours, as it says right here, till the end of the week, I will turn bullish on natural gas. Also, just a little sidebar right here. We have a newsletter coming out later on where we actually discuss this sort of stuff, and natural gas will actually be one of the first things that we're going to discuss on the newsletter. And it's a daily newsletter that's going to be coming out. I will have a video on that coming out later. Make sure you guys turn your notifications on, turn your subscriptions on, so when that comes out, you guys are notified, because we will have a daily newsletter coming out where every single day pre-market, we have a very long newsletter that covers everything from technicals, global macro fundamentals, options trading, which you guys know we do a lot of, futures trading, specifically with time spreads and intermarket spreads. So those sorts of things right there will all be covered inside that pre-market newsletter, in the pre-market perspective that we will be providing. And so definitely something to watch out for right there. Okay, CLQ 2020. So I want to move out to the monthly right here. We did get oversold and then we bounced. What I'm noticing though is that we're turning up on some resistance. Right here, we have some resistance, and then some more resistance right there, resistance right there. This is a whole entire zone full of resistance. This whole zone is full of resistance. This whole zone is full of resistance. And then we did have downside capitulation, and it came up, and it's starting to flatten out on the daily chart. On the daily chart, it is starting to flatten out, and this could possibly be a topping formation. And so I am looking on the bearish side on crude oil. And the way that I'd be playing this is that instead of playing it on crude oil itself, there's just not too much to juice out of it to trade. Is it going to go negative again? It possibly could, but usually if it goes negative, what should happen, like it happened last time, is that you'll already have rolled all your contracts into the next month by the time it even goes negative. And so you really won't be there unless you're a bona fide hedger. So would it go negative? Can it go negative? Definitely can. But I think that was a shorter term positioning or liquidity type event that we had. It was not necessarily a long term event to have it go negative. But something to watch out for right there, it has retraced basically 50% and we're starting to hit on some resistance. I would be looking bearish, but the way that I'm going to play this is tanker stocks. Let me actually give you some tickers for the tanker stocks. So some tickers for tanker stocks are FRO, EURN, BHT. Those are some tanker stocks. Another way to play this though is time spreads. Okay, what are time spreads? Short time spreads in the market for crude oil. And remember that time spreads are different in the world of options than they are in the world of futures. In the world of futures, a time spread is simply where you are buying 1 month of a futures contract and you are selling another month of a futures contract. So what you do is that you would probably go short the August contract, and then you would buy the September contract. You now have created a time spread in the futures world. In the options world, time spreads means something completely different. But in the futures world, that's what time spreads are, and it would be a better way to play it would be to look for a lot more contango, maybe go a bit further out on the curve if you're willing to wait for that contango. Go out further out on the curve where the curve is flat, and look for some contango, and then make money from that time spread starting to expand from that contango. You can do that, or if you just want, those three are good tickers longer term to hold on for oil tankers. What do I want to talk about next? Volatility. So, on the VIX, let's take a look at this on the daily. So the first thing that I noticed is that we had the gap. Gap has not been filled. And volatility is staying high. So we had the grind down. It was a fall down and then turned into a grind down. But what we saw was that it kept on hitting some sort of support. Hit that support again. Bounced. It's bounced right here once again. And why is volatility staying high? It's very interesting because when the S&Ps were at this very same spot right here, volatility was down in the teens, the lower teens, or even the tweens for that matter. But now, the volatility is a lot higher. It's actually at the lower end of its range, but it's at 28, and the range tends to go from 25 all the way up to 45. So why is volatility a lot higher while the market is at the very same spot? And so this provides an interesting theme going forward. A couple of reasons for this, and this may stay, this may not, but people believe that the market is going through a bear market and that's climbing a wall of worry. And so what they're doing is that while they buy up the market, they're simultaneously buying up insurance through the VIX while they're buying up the market, or they're speculating with upside calls. Because instead of putting 100% in the market and having a chance that you will lose it all, you can then put 5% in upside calls, put 95% in cash, and you are protected because you can only lose 5%, or put 95% in the market and then put 5% in puts, you're protected in the amount you can lose. So people are buying up the market in because they believe that they could speculate on the upside, but they're buying up insurance because of the VIX. And so they have the VIX, they're buying up insurance, and simultaneously they're buying up the markets. Does this tell us what's going to happen necessarily? No, but it does tell us that the market is climbing a wall of worry because people are worried about the downside, so they are hedging by going long volatility against the deltas on their position. So if they bought 100 shares of S&Ps, they are long 100 delta. They will go against that and purchase a put option to protect themselves. So something interesting to look at right there. But on the S&Ps, is it worrying that we see that where people are buying up hedges? Not necessarily. It's just telling us that there is a lot of capitulation on the upside where people know that eventually this bear market rally will end, but they don't know whether it's going to end right now or later on. And what happens with a lot of these institutional clients is that when you work at an institution, you are expected to consistently make money. And if you cannot consistently make money, then your clients will leave. And so many of these people have to start buying up the market, but to hedge themselves, they are buying up puts on the market. And when buying up the market, they are willing to leverage, but to reduce volatility and to reduce downside, they then buy up insurance, pushing up the VIX. Just something to look at right there. The other thing I want to talk about with volatility was in regards to algorithms. So when it comes to algorithms and volatility, there are algorithms out there that look at historical volatility back a quarter, and then they'll look at that historical volatility, and based off of that, they will put a certain amount of money in the market. More volatility, less money in the market, more money in cash. And lower volatility, the more money in the market, the less money in cash with more leverage. And so usually they look back a quarter. Well, going back a quarter, it's going to be 1 month, 2 months, 3 months, right here. So going back a quarter will take us all the way back here. When we go back there, we notice that volatility has consistently gone down and down and down. Did have a little pop, but it's just trading sideways. And so these algorithms are now starting to take a larger and larger amount of their portfolios, and they're starting to leverage up more and more and more and more on the side of going and putting money in the markets. And so there's more and more and more money going into the markets, and simultaneously we are having volatility either chopping sideways or going lower. And these algorithms directly look at volatility. They look at volatility on the S&P 500, and based off of that, they will put more money into the market, less money in cash. They will leverage up more. So these algorithms are created in such a way where they use previous volatility, historical volatility over the last 3 months, and they will actually try and have a predictive way of then putting more money into the markets once the volatility has gone lower. So that's the first thing right there. The second thing is that CTA strategies, commodity trading advisors, they tend to trend follow, and their strategies tend to involve looking at volatility while looking at price. So if they believe that something's going into an uptrend, they will follow the uptrend, but to figure out the amount of leverage that they will put on the trade, they will then go ahead and put on more leverage if there's less volatility, or less leverage if there's more volatility. CTAs are starting to get bullish signals now, and they have been for the past month in their portfolios, and they are leveraging up more and more and more because volatility is smaller and smaller and smaller on a historical basis. And this can also push up the market higher. So there's something interesting to watch out for right there. Trade of the week, IWM. So we are going on to IWM. We're doing a ratio spread, long 142 calls, July 10, 2020, quantity 1, short 145 calls, July 10, 2020, quantity 2. Let's take a look at this trade. So, taking a look at this trade right here, what we're really doing when we're going long down here, and then we are going short up here. What we're doing in this trade is that we're creating a scenario where we buy this, so we make money in between the spread, but then we lose money if it goes too far up. This also works in our favor because of theta variance trade. This these two top strikes in the ratio spread and the 1-to-2 ratio spread, they decay very quickly. These bottom strikes, they decay very slowly. So you have slower decay, and hopefully by the time expiration starts to approach, these are already in the money, and then these right here at the very top are still out of the money as we start to approach expiration. And so hopefully then we can see a situation where we can profit on the spread between the two. So just looking to do a ratio spread on our laggard sectors. We haven't done a trade in quite a while on IWM. So long 142 calls, July 10, 2020, quantity 1, and short 145 calls, July 10, 2020, quantity 2. And that is the trade of the week. If you guys have any questions, put them inside the comment section or email us, therealalphaaction@gmail.com. YouTube questions should be the subject line in all caps. Other than that, thank you for watching, everybody. We'll see you next week.